Welcome back. You're watching Startup Central with me, Nayantara Rao. We've got an ET9 exclusive story for you all. The government is keen to open the floodgates of domestic capital for startups, make them more Aatmanirbhar. Earlier this week, we saw an important gazetted notification by the government that allowed pension funds to invest in startups via fund of funds or alternative investment funds. And we now understand at ET now exclusively from our sources in the government, the next step will be for insurance companies. So like in the case of pension funds, insurance companies will be allowed to invest in startups via AIFs or fund of funds. There could once again be conditions. For example, 51% of the AIF corpus must be invested in infrastructure, SMEs, as well as venture capital funds. It must be ring-fenced. The insurance company's investment in the AIF must be ring-fenced from any security or company which is not Indian. With that, the government will also achieve its vision of Aatmanirbhar. I'm going to be discussing this and more with Siddharth Pai of 314 Capital. Siddharth, it's always a pleasure talking to you. Thank you so much. Now,
Likewise,
the lack of capital is seen as a big handicap for the startup ecosystem. It has been flagged off time and time again. Enough parallels have been drawn with how it stands versus America versus China. What the government has done with pension and now what it wants to do with insurance, is it a game changer?
It is actually, Nayantara. Because see, it's been unfortunate that Indian capital, especially Indian institutional capital, has always been a mute spectator to the startup revolution that's been happening in this country for the past decade. The primary reason for this is the fact that the regulations that were actually written in the 60s, 70s, and 80s never actually contemplated a new being known as a startup or an AIF for that matter. So these regulatory restrictions alone, especially in the low yield era, have actually probated and precluded our Indian institutional capital from actually participating in this entire revolution. By government allowing the fund managers of either insurance companies, the CIOs and fund managers of insurance companies, provident funds, and everyone else to actually look at AIFs and startups as another asset class to make sure that their yields are actually met. I think the government's actually done a huge service for them as well. And this also, if you study the parallels of either China or the US venture capital ecosystem became large in the 80s when the government finally realized and allowed university endowments, insurance companies, banks, and everyone to actually start investing. While angel capital can only go so far when it comes to startups, we've actually seen the birth of close to 100 unicorns in the country. And angel capital cannot actually give birth to 100 unicorns. We need larger, long-term, patient, domestic, rupee capital to actually come in and fill that gap. Otherwise, the majority of our startups are no longer going to be Indian-owned or Indian-controlled. And this is one of the reasons, and even our entire stock market in that regard is actually going to see its entire pipeline start shrinking because the next generation of companies would actually prefer listing on NASDAQ just to say that, look, the majority of our shareholders are already foreign. There's no reason for us to actually go and list on the Indian markets and to increase the Indian capital base because Indian capital has treated them in a very shoddy manner for a long period of time. So I think what the government has done as of now is an epic-making decision, and it's actually going to set the tone for rupee capital participating in the startup ecosystem in the coming decade itself.
But are these steps that are being talked about, for pension and insurance to invest in startups via AIFs, which must also have an exposure to infrastructure and SMEs? Will these specifically be game changers? Because, startup investments is risky business. Yes, it can pay off very well. Whereas, infrastructure, SMEs, they do enjoy more benefits also, for example, just the status with the RBI.
True. So, Nayantara, over here, it's also important to read how the regulations have been drafted, where they said for category 1, which is the venture capital funds, they can just invest into them with almost zero restrictions in that regard, provided they meet whatever SEBI stipulated. But if you invest into the private equity or the category 2 guys, what the government is trying to ensure is that a majority of the money doesn't end up in the listed market. A majority of the money actually ends up in the unlisted market. And they're given a choice for the various fund managers to either invest into startups or SMEs or infrastructure itself. So a large number of the fund managers that have been created are also categorized as Cat 2, and most of them have an investment thesis to either invest into startups to a large extent or SMEs as well. I think the industry is just happy for the fact that the government is actually giving these larger institutional players a choice to even look in the direction of AIFs. Otherwise, AIFs used to be pariahs when you actually went and met to any of the CIOs. They get excited by the opportunity. They recognize those companies, but they say, look, I'm sorry, regulations don't actually allow me to invest into any of you as well. So I think the regulations in time, as the industry develops greater level of confidence with these particular CIOs and IRDAI, PFRDA, and everyone else, I think some of these restrictions will actually start getting mitigated over time. But the fact that we actually have a plan to actually start off on is actually a red letter day for the entire industry as a whole.
Okay, so it's a red letter day. So that's why it's always a pleasure talking to you. Thank you so much for joining us on this edition of Startup Central. That's the Startup Central exclusive. We saw earlier this week a move for pension companies to invest in startups. The next could be for insurance. The government very clear. It wants to open the floodgates for domestic capital and the startup ecosystem. If you just look at it, out of the 43 unicorns, more than half of them have already flipped. It's being called almost like a digital capital drain that we are seeing.